Welcome to Wall Street Niger FVG. I go by the name of Mashallah Bemigo Fuya, the macro translator. As you already know, you're welcome to another Forex market breakdown. Let's get into it. Yesterday, USD CPI came in line with market expectation. Today, core PPI and PPI declined below market forecast. What does this mean for the USD in terms of inflation? I think we're seeing a case of cooling inflation. Although inflation expectations still remain elevated due to the Middle East crisis and the negotiations between the US and Iran, we're still seeing a situation that inflation isn't running away. So prices aren't moving as high as market is expecting. And also core PPI and PPI today kind of reaffirm that if producers and manufacturers aren't experiencing higher costs in terms of turning raw material into finished goods, they are likely not to pass that extra cost to consumers. From the data that we've received from core PPI and CPI year on year and month to month, we're likely to see a decline or cooling inflation should we have a deal between the US and Iran. So this does mean that the Federal Reserve will likely continue to keep interest rates unchanged to see how they navigate the inflation challenge that's caused by higher oil prices. That's for the USD. And then earlier today, we had the GBP GDP month to month and also the Prelim GDP quarter on quarter. GDP month to month was higher than market forecast, I think 0.3%. And the Prelim GDP quarter on quarter was also in line with market forecast at 0.4%. What does this mean for the pound and the UK economy? Overall, on the quarterly level, it shows that the economy still remains resilient. On a month-to-month level, GDP grew compared to the previous month. So July grew higher than the previous month, which is a good sign for the UK economy as we go deeper into H2. So it's going to be interesting for the Bank of England. I think the Bank of England is going to be watching this to see the growth. And even though productivity showed some lagging and contraction, overall in the economy, spending is still there, consumer demand is still there, and there's a little bit of growth. So that could allow the Bank of England to continue holding off on interest rates decision to see how situations at the Straits of Hormuz unfold. So it's going to be interesting to see. I think we may likely see a weaker USD when risk-off sentiment dies down, because as of this moment, we're still likely to have safe haven demand for the USD. The tone has already been set. If inflation isn't climbing as high as market is expecting, if prices aren't rising as fast as people expect, it means that we have a case of cooling inflation. Not to forget that we also have inflation expectations, consumer sentiment, retail sales, and core retail sales coming out tomorrow. I think from the data that we're seeing, inflation expectations should likely decline slightly. And also consumer sentiment, I think, may wobble a little bit, but I don't think it will be higher than market forecast. Core retail sales and retail sales, I pretty much want to be surprised by that. So how all of this unfolds further going into H2 as demand will likely increase and spending will likely increase, considering the fact that we are moving into the Ember months where we're likely to see spending peak. So until I come your way next time, do have a wonderful day. Cheers.